Welcome to Building Global Business with Tractus, the podcast where we explore the global trends shaping foreign direct investment and international trade. In this inaugural episode, we're addressing a topic that's top of mind for many business leaders. What does the U.S. administration new measure means for international trade, and what's to expect in the near future? With new measures introduced by the Trump administration and reciprocal responses from around the world, questions continue to emerge around the direction of U.S. trade policy, the role of tariffs, and their broader implications for global business. To help unpack these issues, our managing director, John Evans, who brings over 30 years of experience in international business development, sits down with the Honorable Kenneth Buck, a former 5-term Republican U.S. Congressman and member of the House Foreign Affairs Committee. Mr. Buck brings a valuable insider's perspective on the motivations and potential impacts behind current U.S. policy shifts. We hope you find this conversation insightful. If you enjoy the episode, be sure to subscribe for more expert analysis and practical guidance to support your global growth strategy.
Welcome, Ken.
Thank you. It's good to be with you, Jim.
Thanks. It's nice to see you again, and thank you for taking the time to speak with us. Since before President Trump's election and the inauguration, he's taken a hard stance on what he has called leveling the trade playing field. The administration's focus has been clearly America first and has included doubling down on the tariffs and trade war he started with China during the first administration. Recently, more importantly, this has broadened to include many other countries, all of which have a trade surplus with the U.S., including the long-term allies of Canada, Mexico, and the EU. The list of tariffs and trade policy announcements and countermeasures that have occurred in the last 3 months are numerous and dizzying. We'd really enjoy sort of your thoughts on where this is coming from. There's a lot to unpack. So a simple question to start: what is driving the trade policies coming out of the Trump administration?
So, John, I think anytime you talk about a politician, you look at politics as the driving force. There are a number of Americans who have been left behind in the current economy, and they are dissatisfied and frustrated. And I think that President Trump spoke to those folks in the last election, won an overwhelming mandate to do something about that. I personally think that when we look at the economy with AI, there will be a whole lot more people in this world who are going to be left behind. But right now, the president is focused on how do we bring manufacturing jobs back to the U.S.? How do we bring wealth back? It's no doubt that trade makes both countries that are involved in the trade more wealthy. It creates prosperity. What the president's trying to do right now is create more prosperity on the U.S. side in the trade negotiation.
Thanks. That's insightful. I think a lot of people don't think about international trade as a domestic policy first. Before we get into deeper detail with that, one of the things I'd like to understand, I've heard you speak before a little bit on what motivates Trump. Perhaps you can talk a little bit more about this for our audience so they can better understand how he approaches things.
Sure. So I think President Trump is unique in terms of presidents that we've had in modern American history. He didn't serve in the U.S. Senate like President Biden. He didn't serve as well as President Obama. He didn't serve in a past administration. So President Trump is bringing a real estate developer and, frankly, TV talk show host background to the White House. What that means is he's very aware of his numbers, his popularity numbers, as well as the economic numbers that are out there. And so he considers himself, and wrote a book on the art of the deal, considers himself a master negotiator. What he wants to do is create chaos. He wants to create this crazy, what many people, especially on the left, think is a crazy statement, and then out of that chaos, bring a better deal to the table. So if you start a negotiation and tell somebody, this is what I want, at the end of the negotiation, you're going to get half of what you want. So the president starts out by making some outlandish statement and then hopes to get to the point where he gets everything that he wants.
Okay, I think that's helpful for everyone thinking about how the approach is. I'm going to start with sort of where we are today. In 90 days, there have been a flurry of announcements, tariffs, reciprocal tariffs, non-tariff trade barriers with some of our closest allies, as well as a number of other countries around the globe. And I look at it from the perspective of our clients. Our clients are multinational corporations. They have been for decades doing business abroad, global trade, and making investments, particularly in manufacturing around the world. Right now, our clients are scrambling to figure out just the impact, not only the impact of the tariffs, but the nuts and bolts of it. How do they administer it? They've also had another thing happen where, they're sitting on a lot of cash. A lot of these corporations, they've been looking at investing. This includes investments around the globe, but in the U.S. And the current economic signals and the responses that the economy has shown to President Trump's policies have them making decisions of not making decisions. They're sitting on the sidelines, and I think this is most aptly illustrated yesterday. Apple announced that it would not invest in Ohio at this point because it was concerned about the overall global economy. So I think that where I'm going with this, a lot of companies that would be making investments, including in the United States, are not pulling that trigger. The other thing that I think is really interesting right now is this 90-day window that he's announced gives some of the countries time to engage. I know, for example, here in Thailand, where we're sitting today, the government and business leaders have been scrambling to figure out not only how to engage, but who to engage with. And, they're not even sure really how to reach out and do that. Then I think the final thing, if we talk about today, we had a market rebound with the 90-day pause, but the market's been crashing, and probably more importantly, the bond market's been crashing, which is a clear illustration of a lack of confidence in the U.S. economy. I know that's a number of things, but I'd like sort of your political view on those things.
Well, John, that's a great insight, because it wasn't really the stock market crashing that caused the 90-day pause. It was the stock market crashing at the same time that we saw the volatility with the bond market, and that's what concerned the Treasury Secretary, and why he went into the White House and asked the president to take some action. The money is moving away from the U.S. and moving into other bond markets and other investments at this point, safer, what people consider safer. And so President Trump had to do something. I think overall, what the president's trying to do is to reset the framework where he can start negotiations with individual countries. The best place to start an administration is with the Treasury, is with the State Department, and work with the trade representatives on trade agreements. And those trade agreements, it's not really the tariffs. We keep talking about tariffs, and that's what President Trump talked about, but it's really the non-tariff barriers that President Trump is concerned about. Obviously, the U.S. has its own non-tariff barriers, but he wants to break down those non-tariff barriers in other countries so that the U.S. can compete in those countries and sell products overseas.
That's a really important point, because I think people have focused on the tariffs, and a lot of the media pundits and economists have looked at the calculation and say this doesn't make sense. But clearly what you're saying is that it didn't have to make sense. The reason for putting that out there was to bring those countries to the table to negotiate, not necessarily the tariffs, but some of the other barriers. And there's barriers in lots of the Asian countries where we operate. China's not a level playing field. Thailand and Vietnam are not level playing fields. There's industry sectors that U.S. companies are not allowed to participate in. And so that makes a lot of sense. What I think is interesting about that is that really harkens back to a time several administrations ago. It was under the Obama administration where they were trying to launch and participate in the Trans-Pacific Partnership, and that failed. And then I think the only real major trade policy that happened was then under Trump, which was the signing of the Canada-Mexico-U.S. agreement. And so it's almost counterintuitive to think that he's launched the tariffs to bring the countries to the table to negotiate. Do you think it'll be successful?
I do, and remember what happened during Trump's first term. We had COVID. So Trump starts with a very strong economy. He starts negotiating the trade agreement with Canada and Mexico, and then all of a sudden the world shuts down. There's no way to negotiate a trade agreement when no one's trading and barely anybody's moving from country to country. So I think that some of this would have happened in Trump's first term had COVID not hit and we had a worldwide pandemic. The president clearly isn't using the formula that he talked about on his Liberation Day as a realistic starting point with other countries. What he's telling other countries is we need to talk. And this is a worst case scenario for both of us. So let's get to the table and have this conversation.
I've heard you use the term with Trump that he likes to create chaos. And that's certainly been the case in the last 3 months with this scenario. I'm wondering, do you believe that this creation of chaos is going to result in positive results for the U.S. economy and for our global trade position?
So I think take the trade policy in light of all the other things that are going on. President Trump is driving down the price of gas in the United States and frankly around the world. So the major cause of inflation during the Biden administration will be reduced. So Americans will feel like they have more spending power in that sense. He's also has a big, beautiful bill in the United States Congress that will reduce corporate taxes as well as individual taxes. And again, that will stimulate the economy in the U.S. So the inflationary effect of tariffs in the U.S. will be negated by some of the other policies that President Trump has in place. Now, does that mean that we will see more trade? Ultimately, what President Trump is saying is if I can get these other energy costs down, tax rates down, I'll buy some time to get these negotiations going with other countries. And during that time, we may see an uptick in prices. They'll be softened by the other benefits that Americans have. But in the long run, President Trump believes that he will be able to negotiate trade deals that will bring some jobs back to America and reduce costs with some foreign countries.
That's interesting. One of the things I wonder is it sounds like he's taking a calculated risk that he can keep his constituents in vote for the midterms and have the economy bounce back by then. I also am, as someone who advises on global investments, companies make investment decisions in a long cycle. They're 36 to 60 months. And so, unless they're already down that path and feeling comfortable with it, I don't think you'll see a big bump of investment. You may see a big bump of announcements, which would go to placate the president to show that companies are interested in coming back, but that doesn't mean it will happen. So, from that perspective, I'm maybe not very optimistic and a little more pessimistic. But I'm hoping that the Trump plan will work for the U.S. economy because lower taxes for the companies will be beneficial.
When you saw the first Trump administration corporate tax rates go down, saw a lot of capital come into the U.S. At that point in time. I think that's part of what President Trump and the Treasury Secretary are counting on in this current bill. That if the tax rates come down, people are going to be looking at the U.S. as a friendly environment again. The 90-day pause, when I spoke well before April 2nd, I warned people, business people in Thailand, don't get too concerned about what happens on April 2nd because it's going to change, and it did change. And I would say that 90 days is going to change also. There are going to be a lot of deals, trade deals made between now and that end of that 90-day period. There are going to be extensions because a lot of countries are going to be very close to trade deals. And there's going to be a recognition by the United States that it's in our interest to have a more predictable trade environment for companies.
It makes me think of a question. You mentioned during the first administration and the tax cuts bringing back investment in dollars. That policy didn't stipulate that companies made reinvestments. It stipulated that they brought the dollars back, which were often used to buy back shares. I'm wondering if you think that in this case they may look at actually having a quid pro quo for investment dollars coming in or dollars coming back to be put into investment.
I don't think they will. I think the president and the Treasury Secretary have a lot of faith in businesses. So they're going to do what's best in the business interest. The business may very well buy back stock in the short term, But that gives them flexibility in the long term to make the kind of investments that they need to make that will help grow the economy. So I think either way, we're going to see a benefit to the economy by having lower corporate tax rates.
Thank you. It seems like you have a pretty good idea of how the administration is working, which makes sense. You were part of it for 10 years. What do you think maybe some of the unintended consequences of the tack that they're taking, both positive or negative?
So I think the intended consequence, first of all, in a positive sense, is that President Trump is telling Americans domestically, as well as our trading partners, this is a new day. There's a new sheriff in town, and we've got to make a deal that makes sense for America in the long term. I think the unintended consequence is the volatility that's in the markets right now, and frankly, it's not just in the trade area. His statements about Putin, his statements about Ukraine, his statements about Iran, many of the statements, Panama, Greenland, many of the statements that the president has made are causing some to question whether the U.S. is committed to the alliances that we've traditionally been in. So I think there is a certain volatility across the economic and political spectrum that this president doesn't necessarily regret. Because he wants Europe to spend more money on defense. He wants certain things to take place as a way of maintaining those alliances.
Wow. Bringing in geopolitics on top of our economic discussion is probably a lot more in depth or beyond where we probably want to go. But I think it's a great point, and it shows how the two balance each other globally. And so let's save that for another day. I'd like to thank you for taking the time today to have these discussions, extremely insightful. And I guess the takeaway that I would have is, despite the chaos, there's a method to the madness. Let's hope that President Trump can make America great again.
I hope so also. And in so doing, I think he'll strengthen the world.
Thank you, Ken.
Thank you.